Hello traders and welcome to another video review. Today is Wednesday, February 26, 2025. Let's take a look at the economic calendar for today. So what do we have here? Asian session data, very poor. Construction work done in Australia drops from 2% to 0.5%, which is way lower than the forecast of 1%. German consumer climate deteriorates even further from minus 22.6 to minus 24.7. During the US session, we got the building permits data from the USA, and then we got the wholesale sales from the Canada. All of this is scheduled for release at 2 o'clock and 2:30. Respectively. At 4 o'clock, we got new home sales from the USA, and then we got at the same time crude oil inventories together with the Cushing crude oil inventories. At 6 o'clock, we got FOMC member Bostic to give a speech, and then at 7 o'clock, we got 7-year note auction from the US as well. So quite interesting day, especially during the US session. So let's just get started with the technical part of our review, and let's take a look at the euro dollar first. So euro dollar is continuing our scenario, it's continuing to develop our scenario apparently. Just recently we got the second attempt to break out above the supply zone. Please remember 1.0520, 1.0537, but it failed again. We got the pin bar at the top of this move. Let me just zoom in a little bit. We got the pin bar at the top of this move, then extension to the downside, and these days as you can see, not much is going on here, as the market is still below the supply zone. Please remember, there is still wave C waiting to be developed to the upside, but we need to break above the supply zone to continue this scenario. That's only scenario, that's nothing more than the scenario. We might be all waiting for something that might never come. In our scenario, let me just do this, there you go. In our scenario, we got ABC zigzag connector, wave X, ABC second zigzag, or maybe even more complex and time-consuming correction in form of double three, basically. Yeah, this is how it's called. However, any breakout below a lower channel line, right, the orange one, below wave below 1.0449, below 100 periods moving average on 4-hour time frame chart, as you can see, is basically much more bearish than bullish, right? Because that would mean the supply zone has been defended, bears are in control of the market, they are stronger, they will be pushing the prices way lower than the prices right now. You can take a look here on this RSI indicator during the recent development of the wave A and B, and possibly the wave C. As you can see, we got impulse to the upside, correction, impulse, correction, impulse, correction, and this pattern here is not really welcome during the upward movement. It looks like every time we go up, bears are selling, but we will try again, bears are selling, maybe third time lucky, bears are selling. So this zone here might be used for the bears to sell for the better price basically, and there might be breakout to the downside coming. Obviously, on the other hand, any breakout above the supply zone is very good for the bulls, and higher prices should be seen. So that's the euro dollar. Let's take a look at the US dollar to the Canadian dollar. The particular reason why we want to do this is that because we broke above the technical resistance at 1.4279. So now it is a technical support. Obviously, we can place one more line here. We got one, but we can place the other one to be more specific. 1.4150 is another technical support. So we got this very narrow demand zone here, and the situation here is interesting as well, because we broke above the technical resistance, now support. We broke above the 100 periods moving average, and the bulls are now trying to get as high as possible before bear market will kick in again, right? So, oh no, this is the technical resistance, 1.4370. Let me just take a look here. All right, so that's the technical resistance, and please notice the extremely overbought conditions, right? Overbought conditions are hit at the level of 1.4331. So there's like a 40 pips away from the very nice technical resistance. Let me just mark this resistance just here for you guys. Let me just grab this. No, I want what I want. I want this, and then there is where is my arrow? There you go. This is what I'm looking for. There you go. This is the level I'm talking about. No. This one. There you go. Yeah, that's the arrow. That's the technical resistance. You are not that far away from it. So maybe there will be a spike to the upside and then big sell-off when the bears will enter to the market. Otherwise, it looks like just a regular bounce during the down swing. Any breakout above this technical resistance, oh, it's very nice. For bulls, of course, it's very bullish. So that's the US dollar to the Canadian dollar. We got data from the oil industry. So let's take a look at the crude oil. Let me just switch to daily, because what is going on here is quite kind of okay. This data are no longer valid. This data are valid. So we will just remove this one. 68.99 is the current price, so we might see another attempt to basically test the lows of 68.45. So let's place just a big thick technical support line here. As you can see, all of this movement from the December 20, the edge of the last year, has been basically retraced almost in 100%. Let me just, there you go. No. Oh, this is it. Yeah, that's the situation here, and the area, the range between 60, let's say 6 and 69, 66, 69, is very well documented here on the chart. So we should expect another bounce from this zone. Yeah, this is the zone 66.34, 68.90. A very nice zone for the bulls. Every time we drop towards this zone, at least since the October last year, so let's say half of the year, this was the zone that was actually demand zone, serving the bulls as a very good opportunity to enter the long positions, right? As you can see here, it bounced again, then it went towards the upper zone level 68.90, and then off we go towards $80 per barrel, exactly 80.67. So that's the situation here with the crude oil. And let's take a look at the Bitcoin, because as you obviously know, we just broke below the key technical support. $89,007 is now officially technical resistance. How it looks like on the daily, you can take a look here. So this, let me just grab my rectangle. This zone here is a very important zone for obvious reasons. It used to be demand zone. So let me just make it quickly for you guys. There you go. This was the zone we were talking about, and you can see clearly it was of course green. So demand zone was here. Demand, bounce, and then woof, finally we got breakout below. Low was made at $86,022, so $3,000 below the zone lowest level. There is still a tad of the room here on the RSI daily time frame chart, of course, so there might be some sort of a downside movement. But if we take a look at this chart, we can see distribution zone, right? Distribution cycle, price below the short-term trend line, price below the 100 periods moving average, price breaking below the old demand zone, now supply zone. Who is in charge right now on the Bitcoin? It's quite obvious to say who is in charge, right? So the bears are in charge, and we should expect lower prices to come if bulls will not get back above the level of $100,000. As you can see already, the bulls tried to move higher after the low was made, 86,022. After the low was made, so we got temporary low, temporary support. We bounced higher, but then again there are some kind of candles that look like pin bars. Yeah, so big upper shadows, indicating bears are pushing prices lower. They are trying to push the prices lower again to make pressure on bulls. So without any breakout, at least above the 90,000, then above the $100,000, we cannot say that the Bitcoin is back in short term, of course, back to the uptrend. In short term, in long term, of course, it's still Bitcoin is still in the uptrend in the long term, but in the short one, no. We might even go lower. Maybe some kind of range trading, maybe some sideways correction here, maybe some pushing higher and then pushing back lower by the bears. Something like this might be welcome by the market participants, but finally it looks like the market will fall even lower from these levels if that zone is not clearly violated, at least on a daily time frame chart. Big nice green candle is needed for bulls. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.